Well, it doesn't look it right there. Hello.
Does it look right there?
We're all pointing to different monitor angles here in the studio. So welcome. It's been a little while since Wendy was on, I think. No, you were on last week.
It's you.
No, I was on last week too. Anyway, so it is time for us to do basically a market update, and we'll get to all the current info right after this. Man, I tell you, Photoshop works great. You see how white my teeth are in that picture? So welcome to the show. This is the Real Estate Investor Show. Hard money for real estate investors. We are Carolina Capital Management. We are lenders in the Southeast for real estate professionals. So if you are interested in funding a project, then go to carolinahardmoney.com and click on the Apply Now tab. If you are a passive investor, that means not active, click on the Accredited Investor tab. Thanks for liking, sharing, subscribing, and hitting the bell. Don't forget to also, what is it? Wednesdays with Wendy.
Yeah.
Hey.
This Wednesdays with Wendy is really, gosh, it's so good. I get so much out of it. So please sign up. I really get a lot out of it. It's a one-on-one mentoring session, and we talk all that is of real estate. Whether you're brand new or whether you've been in the business for a while, we can all encourage each other, build each other up, and learn and connect with other people.
Listen, coaching is the key. I get coaching on all kinds of things, not necessarily business, but I get coaching at the gym.
Oh, yeah.
I get coaching in golf.
And your wife coaches you a lot. Pick those socks up off the floor.
That said, Wendy is usually booked up a couple of months in advance, so you can get over into the chat and click on the link to schedule your time.
Yep.
And speaking of the chat, we have a chat box on the right-hand side of your screen or just underneath, depending on the platform you're viewing us from. So if you have any questions or comments, keep them to yourself.
That's right. And don't forget about Quest Expo. That's coming up in September. We also have in the chat box a discount for you at 30% if you use Fairman 30 when you go to questexpo.com to sign up for that. It's really, really good.
Yeah, and if Wendy will take a breath, we may even have a video for the Quest Expo.
Oh, that'd be cool.
Let's see. That music is like a video game from the 80s.
Yeah, it is. And I got to tell you, this Quest Expo, it'll be a great opportunity for not only for you to learn, but to network with some people that will be absolutely worth doing business with. And you'll get to sit at the feet of the great Quincy Long.
Oh, I thought you were going to mention me.
No, John Heyer, Jeff Watson, just incredible, smart people that it's just being in the same room and being able to listen to them is well worth it. And then there's another event that I'm speaking at. It's basically new construction and mobile home in Punta Gorda in June, the 22nd through the 23rd. We've got it up on the screen here where you can go and register there as well. It's going to be really, really good. Talking about new construction, mobile home installation, and it's in Florida. So who can complain about that, right?
Oh, the people in Alaska I can't get there.
It'll be well worth it. It'll be well worth it.
And what was the dates?
The 22nd through the 25th, 4th of June.
Okay.
Yeah. It's
Yeah.
on my birthday.
Speaking of birthdays, Jonathan isn't with us today because he is
Celebrating his birthday. Yeah. Do I get one of those? June 24th is when mine is. I want one of those too. But I want money flying out of mine.
June 6th.
Yeah, that's Bill's. We're all June babies, aren't we?
Where are we now?
So what do we want to talk
Have we
about?
gone through all of our stuff?
Yeah. What do we want to talk about
All right,
first?
so we have a little breaking news. So this is breaking because it came out yesterday, and this is the monthly housing sales for April, and this is new home sales. So these are homes that are produced by builders. These are not existing homes. And the thing that sticks out is that it dropped in April from March 20, where is it?
New home starts.
No, sales.
Okay.
New home sales dropped 26.9% from the previous month.
Is that nationwide?
Yes.
That says U.S. Department, the U.S. Census Bureau.
Yes. Anyway, they do these surveys, and anyway, seasonally adjusted. So since 2000, and yeah, it sounds awful, right?
Well, not according to what I read yesterday, but go ahead.
The headlines sound awful. It's dropped 26.9% from the previous year, same time. And then I'm looking at seasonally adjustable or adjusted. And this graph just goes back to 2017.
And is it taking into account what's available because they're not able to finish the houses? The supply is short.
All it is sales.
Yeah.
They don't tell you why.
Right.
That's for us to figure out.
Right. Which means the numbers can be skewed.
So since 2009, we've been averaging around 600,000 homes being built in this country per year. And prior to 2009, we were averaging 1 million. And of course, as the economy collapsed back then, a lot of people got out of the construction business too. So that said, if you look at this, it's been hovering between 600 and 800,000 homes, new homes being sold since 2017 in this graph. But it looks like about May of 2020, it jumped up to over 1 million.
Yeah.
Just slightly over 1 million.
Yeah.
And from then, it's been steadily declining. So about May of 2020, when everybody was trying to get the hell out of the bigger cities, and they were moving into houses.
Yeah.
So we're just down to what we were, based on this graph, these
Pre-COVID.
numbers are just, they're in the same line as 17, 18, 19.
We're still 4 million houses behind of what we need. And I was reading on a report that our friend Randy Vetter sent us yesterday, and they were actually talking about how new construction is actually still really strong on the sales side, where rehabs and houses that have been around a while, they're dropping in sales, or they're sitting longer, we should say. In fact, and I was looking for it before I came in here, but they said we've actually seen a decrease of 7% nationwide in housing sale prices.
Okay, so they're not losing value. The prices are starting to normalize.
Yeah. Yeah. If there is such a thing as normalized, but
and you have to look at a lot of these areas where it's dropping. People were paying $50,000, $100,000 more than the asking prices. They were getting in the bidding wars.
That's right.
So
That's
those
right.
numbers were way inflated in the
Yeah.
first place.
No doubt. No doubt. They even said in this article that I was reading again yesterday from Randy Vetter, he's a great source of information, that houses have increased 39% over the past year and a half.
Yeah.
That's amazing that
Doesn't
prices
surprise
have
me.
gone up that high.
No,
Now,
and that quickly.
yeah. Now, the other thing that I thought was really, really interesting too is this is an article, this is the Moody Analytics that actually came up with these numbers. And it's talking about the houses that are bubble market houses and that are now overvalued and will see price decreases. And they even put the states in order. Number one city is Boise, Idaho. And this number is just insane. 73% increase in Boise, Idaho.
All those
I wonder where they're coming from.
Yeah, they're all escaping California.
I would pay 73% more to get out of there too. So Sherman, Denison, Texas is sitting at 60% in an increase. That's major, huge. Muskegon, does that sound right?
Never heard
Michigan, that's up 50. Muskegon. Okay, sorry, y'all.
That's all right. You were
50
thinking muscadine grapes.
Yeah, 59% increase on that. Homosassa, anyway, Springs, Florida. Do you know how to say that one?
No.
It's an Indian word. I don't speak Indian. I wish I did. 57%. Morristown, Tennessee is up 57%. Lake Havasu, Arizona, that's up 56%. Coeur d'Alene, Idaho is 56%. Dalton, Georgia is up 55%. Flagstaff, Arizona, 51. Another town in Idaho, Pocatello. Sorry, I don't know that one either. 49. Oregon, Albany, Oregon is up 48%. Florida, Titusville, Melbourne, Florida falls into this. Let me see what else is here. Nashville is up 48%. Clarksville, Tennessee is up 45%. Cleveland, Tennessee, 48%. Las Vegas is number 22. I would have thought that would have been higher in that, but they're sitting at 46%. Asheville, North Carolina, that's the one that's closest to us. That's at 48%. And Myrtle Beach is number 18. Myrtle Beach, South Carolina is sitting at 47%.
What most of these have in common?
Well, they're resort areas. You've got the beach and you've got the mountains. If you look at a lot of these are resort type areas or big city destinations.
Dalton, Georgia.
Well, there's the outlier.
All right. So here, no, what I was going to mention that they all have in common, most of them have in common, is that they are not major metro areas. They are on the outskirts of major MSAs.
Right. So people get
are
out of
moving.
town.
People are moving out further.
Yeah.
And now they're becoming popular, and that's why the values are going way up, because that's where the deals are. Homes have risen in price so quickly that you have to go outside of the MSAs to find a bargain.
Yeah, that's for sure.
Now,
and people are wanting to.
Asheville, surprisingly enough, has been expensive for a while.
Yeah.
But that's relatively speaking. It's not expensive for people from New York or Florida.
Well, it is now.
But it's obviously getting more expensive.
Yeah, it's up there. I was surprised at just the sheer numbers of the percentages of increase in the values of these houses. It's insane. So
it's funny. Spokane, they got Spokane in here.
Yeah, they're number 25.
Just on the other side of the river from Coeur d'Alene, Idaho.
Mm-hmm. Yeah.
So
well, they got out
that
of
whole
Washington.
area. A lot of people are moving from the Pacific coast areas and moving a little bit more inland in Washington and eastern or western Idaho.
So my opinion on this is these are the places that we are most likely going to see a drop in pricing. Is it going to be, crazy like it was in 2008? Absolutely not. The mortgage industry is so different now than it was back then. There's no crazy loans going on. People are just the lenders were so much smarter about how they were underwriting loans. We've got a couple of questions over here. One is, what is an MSA? The other one is, Dalton, Georgia is a pretty mountain town, so it's kind of a resort as well as most of the others you read off. Thank you, Alva.
Stop being so contrary, Alva.
Tell that you're the one that being contrary. I'm telling Mom.
So an MSA is a major something area, statistical area.
Yeah. So you pull in from
Yes.
outside the major town.
Major statistical area.
Yeah. Like in Charlotte, North Carolina, the MSA of Charlotte includes, I think, 7 different counties, right?
I'm not sure.
Yeah. It's Mecklenburg County, but a lot of ones that touch it as well. So there's a lot. Yeah.
And then Wendy and I are going to differ on the values dropping the most in these areas going forward. I think, in my opinion, you're going to see values dropping in the center of the MSAs where these people are leaving and going to. So they're going to these areas and they're leaving the bigger cities like LA and Phoenix because it's too expensive.
Yeah, but they're also not going to be getting the pricing for those houses that they were when people are buying them.
Values aren't going to go up as quickly in those larger markets because people are choosing to move out a little farther. Now we're going to this next one here, which is our CPI, Consumer Price Index data for April. And most of you are aware that
thank you, Mark Bolus.
The increase, thank you. Increase in inflation of 8.3% for 12 months ending April. So inflation's gone up 3%, but energy costs rose 30.3%. And energy is in everything. The price of energy going up affects everything that we buy and do, right?
Yeah.
Although, and the reason I'm bringing this up with these houses being out away, how many more people are going to be willing to go out further
and drive
if they can't afford the fuel?
That's right, car. And that's what I was getting ready to say before you stopped me. I filled my car up.
We do this because we're from a large family and we have to stop in order to get a word in edgeways.
I stopped and got gas. It's been about a week and a half ago, and I filled it to the brim. I drive a Suburban, and it cost me $133 to fill it up.
That's the coffee. You filled it to the rim with brim.
I said brim. Oh yeah, I filled it to the brim. So then this morning I was completely empty again, filled it up, and it was only $121. Wow. Woo! So it's gone down a little bit, not much.
I drive a diesel Passat. I put 15 gallons in. Cost me $81. 15 gallons.
Wow. He used to brag about that car.
And I got that at a discount.
Yeah. Yeah. It's really, really, it's insane the way everything's changing so quickly. The other thing that I've noticed is the lag time in between ordering product and getting it, receiving it, in some cases is getting better. Yeah. But it's expensive because shipping is up so high because of all the prices. And you're hearing people, plane tickets. Oh my gosh, I can't believe the increased cost in plane tickets at this point.
I'm glad you mentioned that. If you have miles, if you have status with an airline, or if you have miles saved up, use your miles.
Yeah, now's the time to do it.
I think the miles, they're giving you better deals on the miles than they are for paying for it. I'll give you an example. I'm flying to Inglewood. Actually, I'm flying to Fort Myers, Florida. I'm using miles. I use 72,000 miles. I'm flying first class round trip for 72,000 miles. If I were to buy that, it would have cost me nearly $1,000 for 2 first class tickets.
Yeah.
And, 72,000 miles is nothing.
Yeah. It's ridiculous.
So anyway, and I wouldn't have gotten first class if I had to pay for it.
We're still frugal.
So now, like I said, if you have miles built up, I strongly encourage people to use those.
The other thing I really want to stress at this point is, as lenders, we're seeing our loans pick up like crazy.
Mm-hmm.
And it's on the hard money side, the fix and flip side. And there's a couple of different reasons for that. One is the time of the year. We always tend to do well in May and June. Things slow down a little bit in July, and then they pick back up the end of August. That's, year over year, except for last year. It's been doing that for a long time. So that's one of the reasons that it's picking up. But we are also seeing more deals available, and investors, especially investors that have been doing this for a while, are not afraid of the recession, and they're not backing off like many of the newer investors are. So they don't have quite the competition that they once had before. But what I really, really want to stress is stick with your numbers. Don't play. Don't push it to the edge, because we don't know what's going to happen, how deep this recession is going to go. And you still need to be smart with the deal that you're working. And even in 2008, when everything went crazy, hard money was still very strong. Mm-hmm. People were still doing loans. You talked about several times about your interest rate being at, in the 14% range. Now you got a better rate, but that's what the rates were at the time. It's all relative. Deals will be there today, just like they'll be there tomorrow, just like they'll be there 5 years from now. So stick with your numbers, be smart.
That said, as lenders, as fund managers, it's better to not have a deal than to make a bad deal.
That's exactly right.
At least you have dry powder for the next opportunity that comes along.
And watch your price range. We do loans all over the Southeast, and we love fix and flip loans, but we've turned down a lot of high-end single families. In the luxury market. We're turning them down. We're not touching them.
We've been there, done that.
Yeah.
But when things slow down, the first thing that gets really soft is your luxury market.
Yeah. And we're not saying that they're bad deals. I think there's a lot of money to be made in that price range. In fact, new construction in that price range is still just as strong as it ever was. I absolutely believe that it's a good market, but for us, it's just a little more risky than we like to be.
Yeah. And, I preach about this all the time. ROE, return on effort.
Mm-hmm.
And it's too easy to spend a lot more effort on those higher end things when stuff goes wrong.
Yeah, even the way they say, well, we only want 50% financing. Well, 50% of nothing is still nothing, right?
That's still an extra 30% of my time I don't want to waste.
That's right. So our advice to you is just be careful. Stick with your numbers. Everything's changing weekly, right?
Yeah. So listen, don't run scared. We as a business, but we in the real estate space, when you're in recession-resistant housing, recession-resistant commercial, you're in the best position.
Yes.
You want to look for either properties that are income producing, and again, don't stretch. It has to produce income. We're not speculators here. We're investors. So it's got to produce income, or it has to sell quickly for a decent margin. And the best way to do the sell quickly for a decent margins is being in the median price point. The best thing for recession-resistant income-producing properties are going to be single-family, small multifamily, and self-storage. If you stay in those categories, either with notes or owning the properties, you're going to be in good shape.
That's right. That's
Okay?
exactly
You're
right.
going to weather this, I say, very easily.
Yes.
Right?
Yes.
Are you done?
I am done. And
All
we
right.
had a question about the
Yep.
discount for Quest. Again, that's Fairman 30. It is listed in the chat, and there it is on the screen.
Yep.
So Ken will be able to see that. Thanks for asking, Ken. So,
Sure.
Folks, thank you for spending another great day with us, right?
Yes. It's nice and cool. It's only like 68 here today, which is awesome. I'm sorry. Put that question back up again. What size loans are you staying away from? We try. It's not an exact amount. We try to stay in the median price point for whatever area that it happens to be in.
But basically, the letters of 500,000 or less is really the after repaired value that we like to stick with.
Yeah, or less
on what we're doing.
Yeah. Now, if it's in a mobile home subdivision, no, we're not doing 500,000. Had to throw that in there.
Yeah,
I'm seeing some crazy. I'm just mentioning that because
he's crazy.
We have some property in Florida. They have a lot of mobile home subdivisions in there, and I'm seeing some crazy prices being asked.
Yeah.
And now they do own the land, but 600,000 for a
but for an investor loan,
double wide.
You can't get an investor loan on a
You have to pay
mobile
cash
home
for that,
anyway.
by the way.
Yeah.
All right. Well, listen, it was great having you guys. Thank you so much for joining us on the Real Estate Investor Show. Hard money for real estate investors. We are Carolina Capital Management. If you have a project that you would like us to take a look at, go to carolinahardmoney.com and click on the Apply Now tab. If you're a passive investor looking for passive returns, click on the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell, and don't forget to sign up for Wednesdays with Wendy.
And we do long-term loans now. We've got 30-year fixed, 10-1 arms, 5-year arms. Thank you, Sue. And we've got some other programs out there, and especially for the portfolio loans. If you've got 20 properties you want to get refinanced or even purchased, we can do that all on one loan.
And because of the rising interest rates, you probably want to stick with an interest only on a income producing property for maybe a 10-year, because let's face it, you'll be able to refinance that property or probably sell it within the 10-year period anyway, but that'll keep your payments lower. All right. Have a great.
And we really mean it this time. Bye.
Have a great weekend. Take care.